Hey everybody, Dave here, Hidden Freedom Investing, and guess what? It's that time of the month where we get to do a dividend portfolio update. I'm excited because we received quite a bit of dividends. We got a lot of dividend increases, and I deployed quite a bit of capital for the month of April as well. I do these once a month, and we're already on the 5th episode. So I started this back in December and basically went from 50,000 all the way up to 150. So guess what? We're gonna go ahead and go through all that today. Couple things before I get started. I did give myself a haircut because my hairdresser I've been using for 7 years is closed down. So I gave myself a number 1. And my eyebrows are getting a little bushy, but it works. So hopefully they'll open up, and hopefully the rest of the country will open up too. Maybe this month. So in addition to that, I want to give a huge shout out to JMac Investing because he provided me with a couple rolls of tickets, and what would I do without JMac? So thank you very much, JMac. I know you didn't have to give that up, but I do appreciate it. So I'm going to give you a big shout out in this video. So let's go ahead and get started and dig into this portfolio, and make sure you pay attention. Somewhere in this video I'm just going to mention something, and it'll kind of give you an opportunity to provide some feedback for me, and I'd appreciate it if you did, because it'd be something interesting. I've never done it before, and kind of see how that plays out. So go ahead and make sure you pay attention somewhere in the video. So the first thing we're going to do is going to run a couple of scripts, and the first script is just going to update all the fractional shares that I've received from the dividend and from all the dividends received. So we'll go ahead and run that first. And the second script we'll run is basically all the dividend increases and dividend information will be updated. So we'll go ahead and run that script second, and once that one's done, we'll go ahead and dig in. So we are looked into the portfolio here. This is Google Sheets, and basically we have 40 positions minus that one up there for that first row. So 39 total positions, and we did add a couple of new ones in the month of April, and I actually think I sold one as well. So we'll go ahead and go through those new additions plus the one I sold. And actually we will go ahead and expand this out and close this one, because this is what I normally... Okay, so this is what the portfolio Google Sheets normally looks like when I do the updates. So we'll keep it at this. We don't really need the industry there. So this is what it normally looks like. And right now we do have $154,000 and $462 in there, with an annual income of $5,617 and total shares about 1960-ish. So that is quite a bit of a jump from the March update that I did, which I think was around 114,000. So that's what, almost 40, that is $40,000 of increase there. And so I did deploy quite a bit of capital in April, but some of that is also because the market came up in April as well. So not all just capital appreciation, quite a bit of capital got added. So if we took the average yield across all these positions in here, it would come out to 3.92%. And we have an average weighted dividend yield that's across the weight of the different positions. They're all weighted right here. So let's go ahead and look at the positions I added here. So I'm kind of curious what anybody would guess I would have added. So let's go ahead. Can anybody kind of see what I added? So yes, Disney did get added. I'm sure many people watching this are probably shocked, and I'm shocked myself. So I felt that the Disney was too good of a price to pass up, and I can always cut it out of the portfolio later. So yes, Disney got added, and that position could be cut out of the portfolio in a year or 2, 5, 10 years. Who knows? I don't know. It may not stay in here long term. I never really, when I bought it, I didn't really plan on it being here long term, but for now, I do like getting more exposure to that communication services. So not just Verizon, not just AT&T. So I kind of added it for that reason only. But it is a low dividend paying stock at 1.7%, so it lowers my average a little bit, the weighted average. So, but it's too good of a price to pass up, so that's why I put it in there. We added SBUX. Is that another one that you guys guessed I would have added? So that's another good price stock. I probably picked up around 70, 71. That's what it's sitting at about right now. So that one's at 2.28% dividend yield. and I felt like the price was pretty good. You know, it may drop down in the 50s, who knows. I will pick up more, so I gave myself room to pick up some more. But it is another consumer discretionary stock, which I have quite a bit of those. If we take a look here, so quite a bit. GPC, you know, Napa Auto Parts, Leggett & Platt, Starbucks, Home Depots, or Home Depot, whatever you want to call it, and McDonald's. So there's quite a bit of consumer discretionary there. I don't have a problem with keeping Starbucks in here for now, so I will increase the shares of Starbucks if the stock goes down, and you know, not probably too much, you know, maybe another $1,000 or so, maybe $1,500. But I don't think that that's gonna be a long-term hold in my portfolio either, along with Disney. Those two positions, you know, could get cut out in a year, 2, 3, 4, 5 years, who knows, I don't know yet. So let's go ahead and reorder these again by the portfolio value, because that's where I normally keep it. So Cisco is in here as well. I do believe I added that one in April. I don't think that was in the portfolio last time. So there's Cisco right there. Picked that up at a pretty good price, and you know, we got a 3.84 currently at this time. So I probably picked it up when it was a little bit lower, when it was over 3.5. And that one, I don't know if that's gonna be a longer term hold, but I do feel comfortable with Cisco in here. It's not the most, you know, strongest tech company, but it is another tech company that's put in here. You know, right now there is quite a few tech companies, so let's go ahead and take a look at those. So there's all the information technologies, and if you want to call ADP a technology company, I'm not really sure if it is or not, but you know, it says it is. So Microsoft, Apple, IBM, Intel, Cisco. So it's a little light in the tech sector, so I wanted to get a little bit more exposure, and that's the reason why Cisco got added. So let's go ahead and reorder these again by the portfolio value. So those were the additions, and I did subtract one, so we'll go back to the watch list because I threw it back in here. So here is the watch list, and that is the stock that I cut. And now I didn't add that very long ago. I probably added it, what, in maybe March, the end of February, March, somewhere around there. So but that stock was up over 20, 22, 25%, somewhere around there, and I ended up selling it. I made a pretty good profit on it. Right when I sold it, that same exact day, literally just minutes after I sold it, I took and basically bought a little bit of Duke, a little bit of PPL, a little bit of ED, all right, and a little bit of Southern. So basically all my utilities that I currently own at this time, and we'll take a look at those. So there's all the utilities right there. Scroll down a little bit. PPL, Duke, Southern, and Con Ed. So when I sold NextERA, put that money, that capital to work in all four of those stocks that same exact day, literally just minutes after selling it. Now PPL may get cut out of this portfolio sometime in the future, and I'll probably just consolidate down to these three core here. And partly just the reason I'll probably end up doing that is just because, you know, it's just less positions I have to manage. Also because I'm trying to work every one of these positions up to 100 shares minimum so I can do the covered call strategies in the future, preparing for early retirement. So that is a plan going forward. So, you know, cutting out PPL, we'll take that, you know, $1,800, we'll spread it across these, raising up the shares. And, you know, one of the other reasons why I cut NEE out as well is just because it was a lower dividend yield, even though that the actual growth was pretty good on it. I needed to get the yield up a little bit. It was dropping down below 3.5%, down to like the 3.3, and I needed to get that up. So that's basically what got cut. That's what got added. We will go ahead and take a look at the dividend increases for this month. And anything that's green here was a dividend increase for the month of April. And right now, it looks like we have quite a bit of them in there. So that's a good sign. You know, here's when a lot of companies are cutting dividends, and they're basically you know, suspending or cutting or something like that, I mean, we're getting some dividend increases. So here, PG, Procter & Gamble, increased their dividend from $3 to $3.16. That was a 5.33% increase. And this is a new column I just added here, right here, dividend increase percentage, just to kind of give me a visual real quick on the actual percentage that they increased it. So we'll go and reset that flag, 3.16. And the next one here is Travelers, and that one they increased from 3.28 up to 3.4, and that was a 3.66% increase. So that's pretty good, Travelers. All right, that's probably a stock I may even cut in the future, but 3.4, clear that one. And the next increase we had was Johnson & Johnson, and that one went from $3.80 up to $4.04. That was a 6.3% increase. That's amazing. That is the reason why Johnson & Johnson needs to be a core holding in your portfolio. Let's go ahead and clear that one, 4.04. And the next one we have that was an increase was on IBM. So there's a stock that we have no idea what the hell they even do anymore. And you know, if it wasn't for them even buying Red Hat, would be like just what do they even do? So they increased theirs. Now it wasn't a big increase, it was a 0.6% increase, but that still counts in my book. You know, it went from basically $6.48 up to $6.52. So that does count as an increase, and that will get them up. Let's see the dividend. Let's go and take a look at those. We'll go clear that flag, but let's go and take a look at IBM here. And 25 years. I have to check that one. So this aristocrat field over here is just based off of this column. It's not pulling it anywhere from off anywhere. It's just pulling off the hits. It's 25 years or more, it will put it as aristocrat. If it's 50 years or more, it will put it as a king. So I have a little formula up here, and that's where that's getting from. So I have to really double check that just to make sure that they are a dividend aristocrat. So they hit that 25 years. Did they officially become a dividend aristocrat? I'll have to look at that. But anyways, they did increase their dividend. So that does count. And you know, in this times, anything, I'm going to take anything I can get at this point. So we have another dividend increase here on Apple. So you know, that's a big increase. We had $3.08 going up to $3.28. That's almost a 6.5% increase. So in these terrible times, we are getting dividend increases, and they're pretty substantial. So let's go ahead and clear that one, 3.28. And that one should increase. Let's go and take a look at Apple here. So Apple's up to 9. So I think they might be going up to 10 years, so we'll just look at that one to see. But Apple will become a dividend aristocrat at some point, you know, along with Microsoft. It's just a matter of time. They have so much money and their payout ratios are so low, they will become a dividend aristocrat at some point. So let's go and take a look at this last one. Is that the last one? Yes, the last one. So the last one here is in Southern. Oh, that's a good one. I love Southern. So I've owned Southern for quite a few years, and I've sold and bought it. But look at that. We got a $2.48 up to $2.56, and that's a 3.2% increase. So you know, we got the 5-year dividend CAGR at 3.39. So that's pretty much right in line, you know, slightly below. So that's not going to really lower that average very much. So I'm pretty happy with that. So let's go ahead and clear this one. So that one is 2.56. So that's cleared. Let's go ahead and order these by the portfolio value again. All right, back to normal. So let's go and take a look at the allocation here. So I did update the allocation here. So I updated it basically at the end of March. And there's a big difference between the last one I had here, which was the end of the year. You know, so there's a difference in communication sector, consumer discretionary. Quite a big difference there in information technology, from 22% up to 25%. And it looks like, let's see, what's energy? Energy's 4 down to 2.7, so that's interesting. There's quite a bit of changes here, so that's, you know, I mean, as I keep adding stuff, I try to always keep them pretty close to what we have here. It's never going to be exact, probably, just because I'm always adding stuff, and stuff's going up in value, stuff's coming down in value, but as long as I'm pretty close. So I did buy a couple more energy shares in Chevron and ExxonMobil, so I am up to 4.3%, a little bit higher than what I was last month, I believe, at like 3 point something percent. So it's just, why wouldn't I add to energy? It's just so low. It's been sold off down to the $13 a barrel, and why wouldn't I just add some more shares? So I did. So I did add more technology. I'm still trying to get up that 25% there. That is pretty tough to do. That's the reason why Cisco got added, so just add some more exposure to it. So communication services got added because I added a little bit of that Disney there, so I'm up to 7%, and that's still below that 10% up here. And it looks like utilities is still, you know, I like the utilities, so I'll probably keep that around between 8 and 10%. So that's kind of like my defensive bonds in this portfolio. So real estate, a little bit lower than what we have over here in real estate at 3%, but when O comes down minus that, you know, if it's still below that 50 or even below 45, we'll keep adding more shares. So that is basically what we are looking at for allocation, and this is just the income per sectors there. And you know, we got consumer staples, the pretty big portion of it at 16.5%. Healthcare, I need to get a little bit more exposure in, but we're 11.5% of income from that. Utilities got a big amount of income coming from the utilities, and then financials is another big portion there at 11.1%. So we're looking at the Schwab investment income thing here, and this is kind of neat. It kind of just, you know, gives you an idea of how much dividends you're going to get for the year and per month, and your average per month and all that. And I think that's kind of cool. It's not, you know, almost exact with what I have in my portfolio, because my portfolio is off a little bit because here we're already in May, and you know, things that may have been reinvested. I may have bought even more stuff in May already, but you know, I'm actually shooting this in May. So but the dividend portfolio was updated to the end of April, so so it is off just a little bit by maybe, you know, $100 or $50 or something like that. So June is my next month. Well, it's actually, let's go back to 2020. So here's 2020. May, it looks like we're going to be getting about $219, and it looks like we've already received some, so that's interesting. And it looks like June's going to be a big month. So right now, you know, going forward the next 12 months, well, we're at about $469. And you know, when I first started this portfolio, I had no idea. I thought it was just going to go up to about 2,000 just this year, and then we had this big old, you know, sell off to 37% or so, I just started sticking a lot more cash in there. For this month alone, for April, I actually deployed over $28,000 just for this month alone. For February, I deployed quite a bit, and then March, I really went hog wild. And then even in April here, deployed over $28,000. So there's still a bit of capital left actually in this portfolio of $22,000 I can still invest. And I do have some capital laying around some other accounts I can move over here if we, you know, keep dropping, or, you know, have a pretty good sell-off or something like that. I'm going to deploy some more. So at this point, I'm going to take advantage of the market sell-off and see if I can get this up to 6,000, you know, and then reevaluate, see what the market is, and then, you know, if we need to push it to 7 and 8, and I'm not really sure. I didn't really have any plans to increase that up this high this year, but you know, you got to take advantage of these sell-offs when you get them, and they don't come very often. And basically what we're having at the beginning of 2020 is something you get every 7 to 10 years. So I'm not going to really look at the buys that I did for April. I normally do that in all my updates, but I'm trying to keep the video a little bit shorter. I did pretty much buy everything in my portfolio, you know, a couple shares here and there throughout the whole month of April. I keep all the sectors pretty much where they need to be. So just know that I bought pretty much everything in my portfolio. So there's, you know, I wouldn't say there's hundreds of buys, but there's pages of them. So we won't go through that. So go ahead and please like and subscribe to this series. I highly appreciate it. If this video gets 200 likes by the end of May, I'm going to buy a position that you choose, any sector, any stock, as long as it's aristocrat or king. I don't care what the actual dividend yield is or anything like that. It just has to be a king or a aristocrat. So that's something new. Kind of give you an idea. I'm kind of curious to know what you guys are going to pick. So well, the first thing we need is get this video up to 200 likes. It shouldn't be a problem. These videos usually get about 700 views in a month. So, you know, with your help, it should have no problem getting to 200 likes. So the very last thing we're going to do here is we're going to go ahead and look at the actual dividend a meter here that I basically set up. So we have a dividend arometer or dividend speedometer or whatever you want to call this thing. So we'll go ahead and just run a script to update all the dividends received for this particular month. So let's go ahead and run the script to update the dividend arometer or dividend speedometer or dividend meter, whatever the heck it's called. And there we go. We got 9 dividends that were received for the month of April, $156 there. And that is the biggest month for me, I believe, so far. So that never gets old running that script. I love that script. So let's go ahead and scroll right here. I'm still working on this. This is a new chart here. I haven't quite finished it yet, but so right now we're at 569 received for this year. And basically that was not my biggest month, so that's still a pretty good month though. 156 compared to last month of 296. So NEE I'll probably delete out of here just because I don't think I received any dividends from that anyway, so we'll probably clear that out. But that's a pretty good month. All right, folks, that's it. If you have any comments, questions, or concerns, go ahead and leave them below. Go ahead and like and subscribe, like I mentioned, 200 likes, so I appreciate it. We'll go ahead and see you in the next video. Thanks for watching.